Welcome to the July synopsis of the Insurance Research Letter Live. Featured articles this month include Workplace Violence in the Healthcare Industry by Jeff Hamilton, President and CEO, Nexus Preparedness Systems. Preparing Your Organization for an Active Shooter Incident by Michelle Colosimo, Director, Black Swan Solutions. Insurance Appraisals of Transportation Systems and Hubs by Nigel P. Wilson, Director, Duff & Phelps. And Professional Indemnity Insurance, A Reminder of the Basics by Andy Wass, Professional Indemnity Specialist Broker with JMD Ross Insurance Brokers in Sydney, Australia. This month's featured presentation discusses Britain's vote to exit the EU. The EU now has 1 gigabyte of free space by George Worsley, chartered insurance practitioner and senior brokerage executive based in the United Kingdom. On June 23rd, voters in the United Kingdom opted to leave the European Union by a majority of 52 to 48. For the Leave voters, it was the reassurance of the nation respecting their wishes. For the Remain voters, it was a bombshell that the many advantages of EU membership would be ignored in favor of issues many of which they thought could be resolved by negotiation. In advance of the Brexit referendum, the UK had tried to renegotiate certain terms. And now, it transpires, leaders of EU members are regretting not having been more flexible in listening to a member's grievances during the months prior to the referendum. The exit of the second largest economy in the EU should be regarded as an embarrassment and failure of the individuals who run the main EU institutions, the European Council, the European Commission, and the European Parliament. There are too many issues to list, but the main ones figuring in the Leavers camp were immigration and sovereignty. An example of the first is that there are more Lithuanians and Poles keeping UK nationals out of a job in the UK than there are Brits keeping nationals out of work in either Lithuania or Poland. Freedom of movement in the EU used to be regarded as a good thing until EU nationals started taking up jobs which UK nationals thought were theirs. An example of the second main issue is that some EU laws can override decisions of the UK Parliament. This was deemed okay until people thought that this was the first stage of a Big Brother United States of Europe. Many readers will have seen articles in the media with headings like, Lloyd's in the London market will suffer if Brexit happens. To lose access to a market of 500 million people will mean negotiating trade deals with 27 and separate reluctant countries. The Canada, Norway, Switzerland models will not suit the UK, etc. Long lists of signatories from global corporations, insurance carriers and related institutions, banks and other financial associations issued warnings of the negative effects of Brexit on the UK economy, all to no effect. But Britain has not left the EU, yet. The formal withdrawal procedure starts when a member triggers Article 50 of the Treaty on European Union. In the case of the UK, this may take a while. You don't just pick up your iPad and smartphone and walk out of the room. Many treaties and agreements have to be combed through, and the duties and responsibilities of the UK and EU towards each other have to be redrawn. Article 50 says that 2 years after being triggered, the member will be regarded as having exited the EU. It'll take much more than 2 years for the UK to be ready to leave. Some people are saying 4 at a minimum. In between times, in a way, nothing will change. Some leaders of EU institutions are already bellowing that Article 50 be implemented immediately. The UK will only do so when it's happy that the divorce arrangements are as good as they can get. Here's a good example. As a result of various EU directives, many aspects of insurance practice have been harmonized in order for cross-border transactions to be as efficient as possible. Not even a Brexit fanatic would want to go back to the old days of green cards for motor insurance, or months of bureaucracy in opening up branches, subsidiaries, and service offices in other EU countries. Issues like passporting, Solvency II, cross-border regulation, etc. need to be ironed out. But what happens 2 years after Article 50? No one knows. This has never happened before. What we are seeing, however, are some knee-jerk reactions. One large foreign banking organization is planning to move 3,000 staffing positions out of the UK. If these jobs go to Paris, say, and almost every position is taken up by Germans, will this ignite a Frexit frenzy? A survey has suggested 50,000 jobs could go. A foreign-based financial services firm whose global operations are located in London has said it will not use the pound sterling as its currency standard. This, in spite of the Bank of England being one of the first to issue reassurances to investors that it's well prepared for Brexit. There have been some rather hopeful reactions. Sinn Féin, once the political wing of a terrorist organization on the Emerald Isle, is calling for Northern Ireland to be ceded to the Republic. Scotland is muttering about a second referendum on independence to be funded by oil at $45 a barrel. And the best of all relates to Spain. This country, with 2 enclaves on the North African coast, is getting stroppy again about British control of Gibraltar. The chief executive of this British overseas territory has apparently told his counterpart that, quote, "If you had any you-know-whats, I would have kicked them in by now," end quote. There are many unknowns about what the next few months will hold, and leaders of the insurance and reinsurance industry inside and outside the UK are seeking to steady the ship and alleviate uncertainty. And the Association of British Insurers, the International Underwriting Association, British Brokers Association, the London Market Group, Insurance Europe, amongst others, have sent out messages of reassurance. Some carriers, however, seem to have more practical concerns, and the hope is that they'll think first before overreacting. In this respect, the very early announcement by the chairman of Lloyd's should be listened to carefully. He said, quote, "I am confident that Lloyd's will stay at the center of the global specialist insurance and reinsurance sector, and I look forward to continuing our valuable relationship with our European partners. For the next 2 years, our business is unchanged. Lloyd's has a well-prepared contingency plan in place, and Lloyd's will be fully equipped to operate in the new environment." End quote. The only thing he didn't say, and one expects this from true Englishmen when they venture forth in the face of uncertainty, tally-ho. Thanks for watching and listening to this month's presentation of the Insurance Research Letter Live. Check back next month for more educational and informative talk about insurance and risk management that will include arson myths debunked by science by Dr. Randy Clarkson of ARCA Incorporated, a national forensic engineering firm. The European project will continue regardless of Brexit by Jeffrey Manners, independent financial services professional based in Belgium, Slovenia, and Croatia. Will your valuation satisfy the new UK Insurance Act by Rebecca Fuller, Director, Duff & Phelps. And next month's featured presentation discusses Brexit and Insurance, a political solution to an economic problem by George Worsley, a chartered insurance practitioner and longtime international brokerage executive based in England.